Good afternoon, team. This is your Mortgage Master with your Mortgage Minute on Wednesday, June 24th. Let's get into it. Okay, so the 10-year Treasury yield fell from a second straight day, roughly 2% relative decline from yesterday's yield, which helped mortgage-backed securities rally and improved mortgage pricing. It was a good day today. I would consider locking if you have any loans in the pipeline. Today's a good day to lock. Could tomorrow be a better day to lock? It's possible. Could it be worse? More than possible. There's nothing worse than chasing the market. But today is a good day to lock. I will always say that when it's a good day. When it's a bad day to lock, I'll tend to say today's a bad day to lock. Maybe wait another day or two. That's typically due to it being on the top of the range or the bottom of the range within the past 30 days. Okay, we lock typically for 30 days, and that's what we are tracking whenever we lock loans on our side. The Iran framework agreement continues to calm markets. Oil prices have continued moving lowered as investors become more confident that the energy supplies won't be disrupted, reducing inflation fears. Trump postponed signing of the bipartisan housing bill, saying he wants Congress to pass the Save America Act first. The housing bill itself had overwhelming bipartisan support and is designed to improve housing affordability, but it's temporarily become a part of a broader legislation negotiation. So here we go. Today was actually pretty good with rates. We're seeing a 10-year Treasury continue to move lower on the second straight trading session. That's been that. So why does any of this matter? Lower oil prices means inflation pressure and inflation expectations come down. Bond prices go up, Treasury yields come down, mortgage-backed securities improve, and mortgage rates get a little bit of relief. Now, don't confuse this with rates suddenly becoming low. Inflation is still running hot. The labor market is incredibly strong, and the Fed is still leaning hawkish. I mean, they say that, but I think that we don't have a hawkish Fed, in my opinion. I can go over that a little bit later, but the market is simply removing some of the inflation premium that is added during the recent geopolitical uncertainty. Now, there's other interesting news today that could matter for housing. Since Trump canceled the ceremony for the bipartisan housing bill that passed through Congress, the bill is intended to improve housing affordability by speeding up construction and limiting institutional ownership to single-family homes. However, the president said he wants Congress to move forward with other legislative priorities before signing the housing package. So the bill isn't dead, it's just temporarily on hold while broader negotiations continue. What does that mean for real estate? For now, today's move is encouraging. We've finally seen some pressure come off the bond market and it's translating into slightly better mortgage pricing. The next big event we'll be watching is the PCE inflation report later this week. If inflation continues to cool alongside lower energy prices, we could see rates continue to stabilize. But if inflation surprises to the upside again, volatility could come right back. So for now, we'll take the win. The bond market had a solid day, mortgage rates improved, and hopefully we're starting to build a little momentum towards the right direction. I'll keep you updated as the market develops. Have a great day, everyone. Call me anytime for anything. We have Funnel Fridays in San Pedro this Friday. I will see you there. And let's enjoy some pizza together. Let's grab some lunch and let's get some websites created, connected to your CRM, and putting your contacts into an email drip campaign that will stay in front of them forever. Well, I will also see you live on Thursday which is tomorrow, at our sales meeting. So we have the sales meeting tomorrow live, so we will see you there. I hope you all know about it. If not, I will make sure that I reach out and let you all know. It was lovely being here for your Mortgage Minute. Please feel free to reach out to me for any new loan scenarios, any problems, any issues. I'd love to be a part of anything you got going on. Thank you so very much, and I'll talk to you next time.